And I just believe over time, Bitcoin will converge toward the S&P times 2 and 50% more volatility in the S&P and 2 times performance, or if the S&P, gives you 12% a year, then Bitcoin ought to be 20% a year. And so that being the case, we did this Bitcoin 24 model, and the 24 model is a 21-year model. And my base case is 29% ARR for the next 21 years. And at 29% ARR, you end up hitting $13 million of Bitcoin in 21 years.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. Michael Saylor has now been in Bitcoin for a full 4-year cycle. He celebrate, reminisce, and project how Bitcoin will evolve in the next 20 years.
MicroStrategy is up 964% since August 10th, 2020. NVIDIA is up 934%. So we're still outperforming all of the 500 S&P. NVIDIA is the number one performer in the S&P. Bitcoin's up 387%. Microsoft, Tesla, Google, they're all up like 100%-ish. I keep track of all the various asset classes since we got into this, and that's also very interesting. The S&P is up 66%. So Bitcoin is like 6x. Bitcoin is 388 versus S&P 66. And gold's up 25%. And silver is up 3%, and bonds are down 16%. Yeah, so the interesting thing, of course, is no one would have thought that MicroStrategy could outperform all 500 members of the S&P 500. I didn't even think that. In fact, we didn't even realize that. That snuck up on us. It didn't. Our benchmark wasn't that. Our benchmark was Bitcoin, right? So we were actually just trying to keep up with Bitcoin. So I think you could have guessed that Bitcoin would actually outperform the S&P. And our initial goal was, how do we get to the point where our company's market cap tracks Bitcoin's market cap? But, along the way, we levered the company. And the only way to beat Bitcoin is more Bitcoin. Right? And so that's why every time people offer you, they pitch you all these business ideas, right? Now, like, well, do you want to invest in this business or that business, or do you want to invest in this real estate? And I say, well, Bitcoin's up like, 46% ARR every year for the past 4 years. So, and that varies, but anywhere from 45 to 55% is the ARR for Bitcoin. So I think, okay, so 50% is my risk-free return. So are you going to give me a proposition which is risk-free better than 50%? And of course, no one's got a proposition that's risk-free better than 50%. So then the question is, well, how the heck are you going to beat better than Bitcoin? And the answer is, the only good idea is borrow a bunch of money for 5% and buy Bitcoin with it. Right? If you can borrow money for 0% or 1 or 5 or 10%, and you're buying Bitcoin and it's returning 40 or 50%, then that's a good idea. So I think Bitcoin's a good idea. I think different ways to securitize or lever Bitcoin, some are bad ideas. Like, for example, trading 20x leverage on Binance on Saturday night, that's not a good idea. Trading on FTX, on the crypto exchanges with like mark-to-market massive leverage is not a good idea. But, if you can take a 30-year mortgage at 3% interest and buy Bitcoin with it, and that's a good idea.
Bitcoin price is trading 16% above the local low of $52,546 reached on September 6, leading analysts to believe that this reversal could be the start of a path to new all-time highs. Bitcoin's local structure turned back to bullish here, after closing higher than the previous September high, and locking in a higher low as well, independent Bitcoin analyst Gel said in a September 17 post on X. Gel was referring to Bitcoin's recent high at $60,670 set on September 13, which was higher than the September 3 high of $59,830. According to the analyst, this setup suggests that the market is strong enough to overcome the resistance at $65,000 and later confront supplier congestion at all-time high. Looks right to take out $65,000 and then new all-time highs. BTC 12-hour chart. Source: Gel. The local bullish shift looks promising, pseudonymous analyst Altstein Trader wrote in response to Gel's analysis, adding that breaching the $65,000 mark could set the stage for new all-time highs. Meanwhile, popular crypto analyst Don Crypto Trades spotted Bitcoin trading close to the middle boundary of a descending parallel channel at $57,902. According to the analyst, this was an interesting spot, as a 5% move above this level would pave the way for a bigger move of about 10% higher. A 15% move from $57,900 places BTC price above $66,000. Additional data from CoinGlass reveals massive ask orders building up around this level, reinforcing its significance to bears. The liquidation heat map above shows that around $40.13 million in ask orders are sitting around the $60,000 level, adding to the stiffness of the resistance on the upside. Meanwhile, Kyladoop shared data from CryptoQuant, revealing a rise in the futures sentiment index since the beginning of the year. According to CryptoQuant, an increase in this metric often precedes significant price surges. With an 89% historical correlation to price jumps across 4 cycles, #Bitcoin looks poised for potential growth.
Well, there's really nothing that interesting to me other than what's interesting is companies that can raise capital to buy Bitcoin and intelligent leverage ideas, like raise $1 billion for 0% interest and buy Bitcoin with it for 7 years. Like, those ideas are interesting to me, but there has to be Bitcoin on one side of the idea, and the other side of the idea needs to be an arbitrage of the extremely cheap fiat interest rates. And if you look at that slide, what you can see is we're assuming a progressive demonetization of gold.
Yep.
And a demonetization of bonds and to a certain degree money. But, we're assuming that there's going to be innovation, and equities will benefit from things like technology and AI. Like, for example, if all the cars in the world drive themselves, or you can manufacture humanoid robots, then maybe you'll see companies that have no employees, but they sell millions of humanoid robots made by robots, so the equity will be valuable. So there's some asset classes that look like they'll grow, that we think will grow faster than others. And art, like there's, you could look at that variety of different ways. Maybe you think art will be demonetized faster, in which case you go tweak that, and in this particular case, this is showing it creeping at 9%, but you could view art as gold and decide it's only going to creep at 5%. Or we just figured art would be better marketed, and it's prettier than gold over time. We're thinking, but anybody can go and adjust these things and make their own assumptions about what'll happen, and then they can come up with their own macro view of the world. That's what's cool about the model, and I would definitely encourage you, Saif, to grab the model, look at the assumptions, tweak it, and come up with your own Bitcoin view and your own macro view. Because I think when you start to ask the question, how does equity sit with real estate, sit with bonds, sit with currencies and art and gold as a long-term store of value, that's very interesting. I mean, I think you've encouraged all of us to think that way. And, I just see the world as there's a bunch of assets that have utility value. And then there's assets that are primarily store of value, and if you think about the portion of our long-term capital, our store of value, clearly that ought to be moving toward Bitcoin, much faster. And then, everyone's going to want to have their place to live and things that they like, that they brag about, their trophy assets. My self-image is I own the football team, right? And so some people will pay a lot of money because the idea of being the owner of the New England Patriots is worth billions of dollars to them if they're a citizen of Boston or something. So there'll be things like that. But ultimately, clearly, Bitcoin is global capital, and it's the best asset, so we think it'll grow the fastest.
One event is set to shape macroeconomic volatility this week: the U.S. Federal Reserve's interest rate cut. The first since March 2020, the move, which will only be confirmed at the Federal Open Market Committee, FOMC, meeting on September 18, has nonetheless long been priced in by markets. The only question is how large it will be. The debate currently centers on 0.25% and 0.5%, and the latest data from CME Group's FedWatch tool currently sees the latter as more likely. For Bitcoin, the picture is complex. While risk assets should technically benefit from the added liquidity flowing into markets as a result of policy easing, observers are already drawing comparisons not to past good times but crashes. While rate cuts may sound positive, it signals deeper concerns like collapsing borrowing, spending, and investment. Financial analyst and investor Jacob King, CEO of crypto newsletter Whalewire, told ex-followers at the weekend. Historically, sharp cuts have preceded recessions. Why? It shows the government is scared and scrambling to reverse an overreach. King specifically referenced the 2008 global financial crisis as the elephant in the room. The warning signs today mirror those of 2008: rising unemployment, plummeting housing starts, falling home sales, and declining economic activity. Even the Fed funds rate chart looks eerily similar to 2007, he concluded. Others are eyeing Bitcoin's close correlation to broader global liquidity conditions, these now on the rise, as grounds for optimism. Popular trader Rickus is meanwhile among those preparing for a bullish BTC price reaction. In part of his own X-analysis, he stated, "If you think rate cuts somehow will cause a sell-off on BTC this week, then you might have another thing coming. It won't cause panic if there's no panic in the stock market in the first place. If rate cuts happen, then generally the first cuts can be very bullish actually, and has been known to coincide with price rises, depending the backdrop. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.